The bear thesis from a technical point of view is that this is a double top, and if we fail to set a new high, that it's really look out below. I liked Jonathan's thoughts just there, which were a little bit more, restrained. Hey, we might have a 2 to 3% pullback, but then set up for a new high. Frankly, I think we are set up for a new high, and I don't think you need a 2 to 3% pullback because simply the earnings are so good and the economic activity is so good. The only thing that could derail what I'm talking about is if the trade war issues get more severe, which, hey, August 23rd, we've got new tariffs coming in. I'd like to see a new high set in the S&P before that. I think we will.
I mean, I'm going to agree with you. I think longer term we're set up for the market to go higher. And, I love when all these technicians call for the 2-3% and kind of where were they when the market runs. If you're looking out 6 months to a year, 18 months, this is the opportunity. And Jim and I have been talking about this. You want to buy the stocks that have good, strong momentum, earnings growth, that are going to do well. And I like the financials in there, I like the industrials in there. I think those are some of the opportunities that you're getting set up for.
Mike Wilson also, by the way, points out Apple's $1 trillion milestone sure sounds, I'm quoting, sure sounds like a ringing of the bell to us.
Capital markets, for some reason, it is just never satisfied. I mean, we complained coming into this quarter that it was all about the Russell. It was all about the NASDAQ. Well, the high for the Russell occurred on July 10th. The high for the NASDAQ occurred on July 25th. So what's happened now? We got exactly what we wanted. We wanted some broad-based participation.
Right.
We're getting financials.
Right.
We're getting healthcare.
Explain to me
and
then,
now we're not happy.
Right. Why? So explain to me then, Jim, why the next 2 to 3% shouldn't be up rather than down.
No, that was the argument I was making. Do you want me to just confirm that again? Look, I will, okay? You've got good profit growth. You've got good economic growth. And by the way, some of the more garden variety risks like inflation or interest rates, they're just not here. I know we keep talking about them, but they're just not here. So in the absence of that, I don't see anything to really hold us back except trade war issues.
We've had a great rotation.
I don't even think that does it anymore.
Well, we've had this great rotation. I'll tell you.
Famous last words.
One area that does bother me a little bit is we've gotten through a huge bulk of the major earnings, right? I mean, when we talk about the big cap. Now we get into the small cap.
That's fair.
I got to tell you, they could be great. But you know what? The volumes immediately start to shift a little bit as soon as we shift away from the really big, the major corporations that we've had over the last month. And take a look at how financials, 6% on the last month. You look at healthcare over the last period of time, up 12%. We have a lot of different areas that weren't participating. It was all about tech. Now that tech's maybe sort of stalled for the moment. I think there are other areas that actually can pick that up. But we could sell off a little bit, Scott, based upon the earnings that have been what's really propelled us, could certainly pull back a little bit.
You can't fault people as well for looking at some of these moments, whether milestone or to the
trillions,
stunning, whether it's, the Tesla thing that happened yesterday, Apple hitting $1 trillion the week prior, other things that have happened in the market most recently that make you say, boy.
Very fair.
We're going to look back and say this was a top.
Very fair point. But historically looking back, you want to see volatility, maybe giving an indication. I don't think, Pete, you would say we're seeing that. Credit markets remain relatively calm. Two areas of risk if you want to focus, you want to be worried about something. The fact that the emerging markets maybe have not come back as strongly and they're not participating.
But they've underperformed
that's China.
And they can, right. So that's a concern.
Issues.
There's a concern. And then I think the biggest concern for the marketplace
There's a dollar issue
would
too.
be, the liquidity issue. That's the biggest issue, really. In equities themselves, if we were ever to have a correction, is the liquidity going to be there to service
the biggest risk right now is what? Trade, the Fed, or the dollar?
Trade and the dollar goes with it. But we're missing one other positive. I got to point this out.
Been there,
Hang on. I want to sing your song for a second. You were talking about earnings. There is still one sector left to come, and that's retail. Your buddies at Target, Kohl's, Macy's, everybody's going to report. And usually we don't care about that in the summer, but this is an opportunity to indicate whether the consumer is hanging in there. First quarter and second quarter GDP would seem to indicate that the consumer is alive and very strong, and these earnings coming out in the next 2 weeks can support the market.